Hello, this is a video from Ascend Trading, and we're going to be looking into support and resistance. Before we can get into support and resistance, we need to understand the concept of supply and demand. In supply and demand, you have two curves. There's a supply curve and a demand curve. And when these two curves they intersect, you would get a price. In terms of trading, the supply curve is based on the float available, while the demand curve is measured based on volume. These prices they do change over time, and that's because either a change in the supply or a change in demand, and also sometimes both. Um, you can see here that there's a new demand curve, so it results in a higher price, and so therefore you want to look for stocks with high volume, and that's because without volume or little volume, the price will either move very little or not move at all. Then we're going to be looking in terms of a new supply curve, and for this curve right here, you can see that the price right here with the higher supply, it results in a lower price than the old curve with less supply, and that's because there's more scarcity for that supply, and that results in a higher price. So let's say you're comparing two stocks with the same volume, but two different floats, one with the smaller flow and the higher flow. And even with the same volume, the stock with the higher flow will move in a smaller percentage than the stock with the lower flow. And like I said, this is due because of scarcity. Support and resistance. Now we understand that they act as an area of supply and demand, and that's because they prevent the price from being pushed a certain direction, whether it's being pushed up or being pushed down. Now, they're not always a definite number, and it's usually sometimes in a form of a range. They act as pivot points for a reversal. So, whether if the stock price is moving up, it would a resistance would prevent it from moving higher. And in a bearish trend, the support will pivot and then push the stock right back up. They aren't definite, and sometimes they do break that, and this is because of the sentiment of the stock or even the sentiment of the market. Now you can see here on this chart that right here in green, they're labeled as a support level, and that's because you can see the pivot. The price is being prevented from moving further below the line, and therefore this is confirmed that this is a support level for this stock. If you were a long entry, you would enter at the support level. And like I said earlier, sometimes they do break, and you want to set a stop loss right under the support level. Resistance. You can see here that in right here in resistance, the stock is unable to push above the level, and that's because this area is an area of supply. Without enough demand, the stock will push down. So if you were a short trader, you would enter right here, and your target price is whatever below the resistance level. And you can right here on this chart, sometimes that old resistance, they do act as a form of support, and that's because these areas that were once area of supply, they become an area of demand. And you can see here that the price right here at this resistance level has been pushed through, and that's because that this area of the this once area of supply is being outweighed by demand, and therefore it becomes the support level because this is once an area of demand, and therefore when the stock price is being pushed down, you want to look for an entry at this area, and that's because it was once an area of demand. Right here, you can see that it's bearish to the point where this once area of demand becomes an area of supply, and therefore it pushes the stock further. So that's why if you were trying to enter a long position right here, you're gonna want to set a stop loss. Not all your trades will go perfect, and therefore, as long as that you have more profitable trades than losses, then you'll have a net gain. As you can see earlier, that support and resistance, they can be broken, so that's why you're gonna always have a stop loss. Um, Whether if you're long, then you want to enter a trade at the support level. If you're a bear, you're gonna want to enter a trade at the resistance level. Never enter a trade from in between, because it's very difficult to calculate risk and rewards if you're trading in between support and resistance. So that's why in order to calculate risk and rewards, you want to trade at the extreme, either the support level or the resistance level, and this will help you consider the risk and rewards. So for an example, if you're trading at the support level and you enter in, then you might want to consider something like 1 to 3 risk versus rewards. And like I said earlier, not all your trades will go perfectly, and even if you get half the trades, you will always have some sort of net gain because you're risking small for high. So for an example, if you're risking $5 for every $15, and that results in a net gain of $10. Now, because this is a very basic form of trading, you don't really need indicators to trade support and resistance. You just need to look at the chart history, and always remember to be patient, because sometimes when you place an order for that future level, they don't always hit, and so then you're going to need to consider different levels of support and resistance to enter in your trades. And thank you for watching this video from Ascend Trading.